Once again, the Fed's come to the rescue of global markets. Last night we saw Ben Bernanke coming out again and basically reiterating exactly what he's been saying over the last few months, with almost basically no change to Fed policy at all. We saw obviously back with Professor Janet Yellen and also his speech back in February that they were going to continue doing the $85 billion worth of spending every month on that bond buying and also asset purchasing as they expand the budget sheet. It's going to continue. They haven't changed any sort of policy there at all. The reason for it, and it's their major reason, is again they believe that unemployment is well and truly too high for their eyes. It means that they can keep their interest rates again almost at record lows, down near that 0%, as inflation continues to hold at about 2.5% as well, with obviously the unemployment level sitting at around about 7.7%. The one thing that has changed is they have changed slightly to the upside with regards to how their outlook for the economy is. It is a little bit more towards wording like moderate. They actually see also that they've upgraded their opinion and their outlook for unemployment as well. They believe next year that the unemployment rate should probably go to about 6.5 to 7%, the year after going to about 6 to 6.5%. That is a bit of a change. It obviously does suggest that things are slightly improving, but on a short-term view, it's well and truly full steam ahead from the Fed. They're going to continue to expand their balance sheet, and that will probably hold sway for the coming months. It did well and truly drive the Dow and the S&P up hard last night. Both of them moved up quite strongly. We saw the Dow make another record high, but it waned sort of through the day over there in New York. But once the news for the Fed came out, it jumped up back up again. The S&P again now is back within striking distance of its all-time high of 1576, and it could even find itself at their all-time high close of 1565. So very, very strong lead from the US. The one thing that was also interesting last night is that we saw Europe take a slight back seat. Look, the Cypriot deal still hasn't occurred. It looks like they'll basically put the banking holidays that they're currently under all the way through till next Tuesday. It also means that the budgetary vote that they're going to have on that banking levy will be probably postponed to either tomorrow or even as late as next Monday. The ECB is actually expected to hold its monetary stimulus over there to the Cypriot banks. They are meeting in Frankfurt tonight, and it will be very interesting to see how that goes. Investors are very much speculating that the ECB will sort of hold their current sort of stance with regards to Cyprus. It would be very, very interesting to see how we're actually going to get through this deal. If they do indeed reject the banking levy again, it's very hard to see where they can raise taxes to actually get the kind of bailout funding they're actually looking for. Obviously, 10 billion euros is about 80% of GDP in Cyprus. Very, very hard to find out where another form of funding would come from if they're not going to actually tax the bank levies over there in Cyprus. With that in mind, it did actually mean that basically we saw the European market snapping a 4-day losing streak. We saw the FTSE up, the DAX and the CAC also up. It also drove the euro higher against all of its major peers, bar one being the Swiss franc. It did mean that Europe was slightly sort of more positive last night and probably put a bit of an ease in investors' minds, but it is well and truly still there. It'll be very interesting to see how it goes tomorrow and also at the start of next week. Moving to the regional markets here over in Asia, it's going to be a very interesting day today. We obviously saw last night that the Shanghai Composite jumped up 2.7%. Very much a strong move. It's their highest advance in 2.5 months. The other thing that's sort of quite interesting to see is that the yuan, also known as the renminbi, the Chinese currency, is at 19-year highs at about 6.21 yen to the US dollar. It's the highest level in 19 years, and that means that basically when the Chinese government amalgamated the official and market rates back in 1993, it's now at that level and higher. So it's quite an interesting sort of situation. We saw the yen obviously come off quite strongly last night with the fact that risk sort of switched back on, and that will mean that the Nikkei will jump up today. It looks like making another higher high today. We're expecting the Nikkei to be up around about 12,650 points and maybe even higher. It's another higher high. It really does sort of suggest that Nikkei is well and truly the place to be right now. It is well and truly outstripping the rest of the global markets. It's up around about 20% for the year. The Dow, for instance, probably the next closest is about 10.5%, maybe even 12% now with last night's move. So it's well and truly outstripping, and that should hopefully drive the ASX higher today. We obviously saw the SPY futures up about 0.8% last night, and it should mean that obviously those defensives picked up again today. We saw the banks starting to pick up again after being pushed down for 3 days straight. Woolies, Wesfarmers and Telstra are also another place to probably look at. But the one thing that is still going to weigh on our market is the iron ore plays. We saw again another boutique firm coming out last night and sort of suggesting that the iron ore long term does look quite shaky. They have put another sort of call out similar to what Goldman's did with regards to a short position in the global miners. The ones that they singled out here in Australia was actually Fortescue and also Rio. One thing I will say, Rio did jump up in London last night, but BHP was off. BHP's ADR is suggesting it's only going to add about 8 cents today, so it won't suggest that sort of 21 to 22 points that we're calling the market up today is going to come from the material space. So watch the defensive against today as we hopefully see the market reversing the losses of the last few days and moving higher today, calling the market up about 49.85 to 49.90.